welcome. You have tuned into Buy Now, Sell Now on ET Now. I'm Shrishti Sharma and with me Cheryl D'Souza. And viewers, this is the show where you get answers for all your stock-related queries. In a short while from now, we will connect with our experts where you get a chance to ask your stock-related queries. But before that, let's have a look at what the markets are up to. So a good recovery from the day's lowest points. Finally, some relief for all the bulls out there. But viewers, do mind what Cheryl is wearing. So if markets turn around in the second half,
in my defense, I'm wearing this to dawn the festive season, the festive color, and given the fact that today will be my last show for the year 2023 for Buy Now, Sell Now. I thought, so what better way to celebrate with the shade of red, but no, this does not indicate bear, but
absolutely,
maybe it indicates the Santa rally that was underway in the markets. We've just taken a breather. That's the way how we should actually look at the way how the markets have corrected, given the fact we've seen the sharp rally that was underway for almost 2 months. It was a happy Diwali. It led on to a Merry Christmas sort of a look coming in for the market. So yes, we've taken a tad bit of pause, but talking about today's market move, yes, we've recovered very smartly from the day's lowest point. And if you look at the advance decline ratio right now, very much in favor of the gainers. So suffice to say, hopefully we will be able to maintain this recovery towards the latter part of the trading session. And also key to note is the fact the US futures also have stabilized this after they saw a sharp crack in yesterday's trading session as well. So talking of the rest of the market then, you have Power Grid, LTI, Mindtree, UPL, Britannia and HDFC Bank among the top gainers on the Nifty at this point in time. But when you look at the losing end of the market, it is Axis Bank that is taking pretty easy in trade today. 2.4% downtick coming for Axis Bank. You have Cipla, L&T, SBI Life as well as Bajaj Auto. All of them are actually declining in trade today. Let's take a look at the sectoral indices and what the sectoral picture is looking like at this point in time. And if you look at the sectoral picture, you only have actually Realty and Pharma that are declining in trade right now, with Pharma being the top sectoral loser. While on the flip side, you have the PSUs that are still holding on to very strong gains. Actually, in a short while from now or through the course of the show, we will hear out what exactly Ramesh Damani had to say about the PSU sector in particular, because he believes that the leadership will still be maintained with the PSU sector. Apart from that, if you look at broader markets, they are actually seeing very, very healthy moves in trade today. 1% uptick coming in for small cap index. So that's the way how the market picture is looking like at this point in time, Shrishti, and very smart recovery. And hopefully today the markets won't take a cue from what I'm wearing and in fact stay in the green territory.
No, absolutely. That was just a joke around, but definitely the festive cheer should be on the streets, and that's at least giving some kind of a respite as of now. But moving on then, and let's shift focus to the Buy Now, Sell Now lens. And RBI has issued an advisory to the banks and the NBFCs banning them from investing in alternative investment fund, which have invested in debtor firms. Now, some of the stocks yesterday were in focus, and even today they are in focus too, wherein stocks like IIFL Finance and Piramal Enterprise were seen to be feeling the heat yesterday. But today Piramal Enterprise has come out with a clarification that their exposure to AIFs, what does it mean and how are they looking to cover that? Let's get in more details, and let's go across to my colleague Gaurav, who is joining us right now. Take it away, Gaurav.
To address the possible evergreening transactions happening in the financial institutes, now RBI has banned banks and NBFCs investing in alternate investment funds. They have also asked banks and NBFCs to liquidate all the holdings within the next 30 days, and if they are unable to do so, they will have to give 100% of its provision on their books. Now, on back of this, there were some names coming up, and one of those names was Piramal Enterprises. Now, Piramal Enterprises has come up with their statement. They believe that their total investment value in the alternate investment funds is worth 3,817 crores, and out of which 3,164 crore rupees of investment is into AIFs, which has exposure to some kind of debtor companies in the Piramal Enterprises. Now, companies taking conservative view, and they are ready to take the entire 3,164 crores in their books in the way of provisioning or capital funding. Now, considering that this total amount is around 20% of the entire investments made by Piramal Enterprises, and they have total net worth of 28,710 crores. The impact, if let's say they are not able to liquidate this position within the next 30 days, the impact of the provisioning could be somewhere somewhere on the negative side, and they could see a downside of around 11% on their net worth as well as their CRAR ratio. If we talk about the stock value, the stock was down almost by 8% yesterday, and it is down almost by 2% today. So it will be really interesting to see how investors take this management's concerns and management's announcements, and see how the stock trades further.
All right, thank you so much for that, Gaurav, for actually telling us what exactly RBI has indicated in that sort of note or announcement that came 2 days ago. But let's actually bring on board our experts for today. We have Kunal Bothra as well as Shahina Mukaddam joining us on the show. Very good morning to you, Shahina, as well as Kunal. Thank you so much for joining us on ET. Now, Shahina, firstly, for the benefit of our viewers, if you could help understand or explain what this sort of a circular coming in from RBI actually means for banks and also companies like Piramal Enterprises, which has come out for with a clarification today.
Well, I think the RBI's mission is very clear. They want to keep these two segments separate. Investment and the portfolio should be separate for both banks and NBFCs. One is investments, and the second one being the loan book. So to that extent, I think it's a positive move. The impact is likely to be there both on banks and NBFCs, especially those who have such exposure. Like we have heard from Piramal, there is exposure, but they have got a month to actually decide whether they would like to create the provisions, and that would have an impact on their balance sheet and ratios, or them to liquidate some, which will actually have an effect on the books or on the AUMs of the AIFs. So I think both these segments are likely to be affected to some extent. Naturally, we will have to see, I think each of these companies, like for example, we also have heard of IIFL. So we have to hear from each of them as to what is their game plan going to be, how they are going to manage this. But yes, there is going to be an impact on both the raising of funds by AIFs and also some of the books of the banks and some of the NBFCs. So to that extent, it is a slight negative overall.
So slight negative for these companies in focus, especially from the likes of IIFL Finance and Piramal Enterprise. But Kunal, because just yesterday we saw the whole market falling, and in that, both of these counters have fallen anywhere between 7 to 9%. As of now, what's your take on the technical front? Do you believe that more weakness is in the store for these companies?
Well, in fact, I would believe that this could actually be a very good buying opportunity for both of these names, Piramal Enterprise as well as IIFL Finance. In fact, for Piramal Enterprise specifically, even though the stock is reeling below its 200-day moving average, the good part is that many of the indicators in the last 1 or 2 weeks have started to trend up higher, and that's the first sign. So this is more like a divergence creeping in, where the indicators have started to trend up higher and the are making fresh swing lows for itself. This indicates that this could probably be a last leg of sell-off for stock prices. So wouldn't be surprised that from current levels, say over the next maybe couple of months, you actually see these stocks, many of these stocks, going into a strong recovery.
All right, that's the views coming in from both of our experts. But on that note, we slip into a break on this edition of Buy Now, Sell Now. When we come back, we'll start taking your query, viewers, so don't go anywhere. Welcome back. You're watching Buy Now, Sell Now on ET Now. And this is a show where we get you answers for all of your stock-related queries. Remember, viewers, you can connect to us live on the WhatsApp number that's flashing on your screen. Do remember to mention your name, the stock that you're looking to invest in, mention that name as well. And we will guide you with the right answers with our experts. Also, there are a lot of queries that are already actually pouring in on our Twitter handle. So let me kickstart with the first query that I have for you, Kunal. It's coming from Reema. She's writing to us from Pune. She wants to know if this is a good level to add more of ICICI Bank and DLF. She has ICICI Bank from an average price of 813, DLF from the average price of 580.
Well, yeah, I think both of these stocks are attractive. ICICI Bank particularly, I think at current levels looks more attractive. The stock is relatively low to moderate beta. My only concern is with this leg of sell-off. It could probably accentuate by maybe another couple of 100 points, if not more, for the benchmark Nifty. So I think in that aspect, maybe there could be an increased or a slight incremental sell-off in the higher risk stocks or the more performing ones like real estate names. So timing could be a bit more better. ICICI Bank relatively is a low to moderate beta stock, so you can probably look to buy the stock at current levels. DLF, in case if the correction extends by say another 5% odd as a margin, then closer to 650 could be a very good level to buy.
Okay, moving on to the next one. And Shahina, this query is from Bhardwaj, and he has 870 shares of IOC from a price of 97 rupees. He wants to know, can he go ahead and buy more at current market price where he wishes to stay invested for the next 2 to 3 years?
Well, I think the OMC stocks are back on the buying list. So for the medium term, he can look to add on IOC. But for the longer term, I think he needs to review. I don't see OMCs as being part of a long-term portfolio.
All right. This one is coming in from Mayank Saraf, who's writing to us from New Delhi. He wants to know about Oriental Rail, 5,000 shares of 170 rupees per share. He wants to know your view for the next 2 years, Shaheen. I'm not sure if you tracked this one, but if you do, what's your take on this one?
No, I don't. I pass this stuff.
All right, Kunal, I believe that you also would not be tracking this particular counter. So let me go on to the next one. And this one is coming from Dr. Uday Singh, who is a senior citizen right from Hyderabad. And he's saying at the present rate of around 329 rupees per share of Tata Power, what would be the price 1 year down the line, Kunal?
So again, difficult to comprehend, 1 year down the line, but my sense is that the stock is getting into a bit of a overbought territory on the short-term chart. So, when a stock gets into a strong rally and then a sudden pause, which extends which extends for the stock in terms of the time frame, then we typically expect the stock to get into a bit of a plateauing zone. So I think at current levels, my expectation is that the stock may actually go into a retest of the 300 mark before it gets into a rally again. So not sure of the exact time frame from 1 year how the stock would behave, but in terms of the near-term patterns, I would possibly look at a retest of the 300 levels for Tata Power, and then maybe a comeback rally if the entire market also gets into a recovery closer to 340, 350 levels.
Okay, Shahina, the next query is from Akshay, and his query is, can you suggest a good stock for a long term in the EMS sector, from an EMS space, any stock that you like at this point in time, Shahina?
You can look at some of the listings that have happened in the last 1 odd year, and probably you can look at something like a. I mean, I don't have any stock as of now on top of my mind, so I'll just let this go.
All right, so this is a bit of a longish query coming from Dikshita. She started investing in the year September 2020, and most of her investments were based on expert advisors taking the programs. But she's also achieved 100% overall profit as well in her portfolio. She wants to advise on which stocks to be invested for the next 3 years, in what ratio, and also ratio in which low, moderate, and high beta stocks can be invested for the next 3 years. She wants this advice given the fact that we are entering a brand new year and she wants to actually rejig her portfolio. Shahina?
Well, she should look at some of the banks. It can be a combination of private sector and public sector, SBI being the public sector bank I would prefer. Private sector, of course, some of the largest ones can be part of your portfolio. Take your pick. Then you need to have a small portion in tech also. I think tech has been underinvested in, and over the next maybe 2 to 3 years, the sector could bounce back. So you should have, about 30% of your portfolio in some of the large caps in these two sectors. Other than that, you can look at other sectors like defense. You have power. You have some of the FMCG stocks. So then you can have a mix of the small cap, large cap in these. And I think most of the stocks in these sectors we have discussed. So you can take your pick and invest, create a portfolio of about 15 to 20 stocks and hold it for about 3 to 5 years.
Okay, moving on then. And Kunal, the next query is coming from Pradeep. He's a senior citizen, and he's currently holding shares of Carousel, which he bought at a price of 635. And he also has Stega Industries, which he bought at a price of 629. What's the long-term view on both of these counters? He wished to stay invested for the next 1 year.
See, I think Carousel is, both of the charts are very attractive. Carousel, I think, formed a major bottom around 450 mark start of this year. And from there, the stock has almost doubled to 900, 950 mark, which was the recent high. Now, of course, the stock is going through its own phase of correction, but it's already gone through more than a 10 to 15% correction so far from the 975, 990 levels for Carousel. So, which means that maybe sooner or later the stock would probably find a bottom for itself. From here on, once the stock rallies up higher, I would probably expect a retest of that 975 mark for the stock. So would be the case with Tega. Even that stock, of course, limited chart history. But then over the last 8 to 9 months, the stock has seen a very strong recovery from 600 to 1100 mark. It's gone through a time-wise consolidation. And post the breakout, I would expect the stock to head towards at least 1250 to 1300 mark over the very near term.
All right, another one coming for you, Kunal. This one has come from Lalit. He has 100 shares of NRB bearings at a price of 283 rupees per share. He wants to know whether he should hold on to this one or exit.
So I'm assuming if it's a short-term query, I think you can continue to hold on. The last 4 or 5 days already, the stock has corrected from 310 to now 275, which is the low the stock has made, which is a good 10% correction broadly for the stock over the near term. And today's candlestick pattern, the open and low, also suggests that possibly a near-term bottom could be at place. So maybe keep a watch on this level of 275. If it holds on, then I think you can continue to hold on to your positions over here.
Okay, Shahina, the next query is from MVS Rao, and he wants an advice on the banking major HDFC Bank, where he's holding more than 3,500 shares, which he bought at a price of 1,100 a piece. He wants to know, do you have any target for the next 3 months? Actually, I thought that it's next 3 years, but what's your advice? Do you have any advice in the short term?
He can continue holding it. You can keep a stop loss of about close to, I mean, it's such a short-term target. So keep a stop loss close to 1,600. It's a very short-term target. And you can look for something like 1,700 or 1,750 on the upside. But longer term, of course, you've got much higher levels you can look at. So I would recommend that you buy and hold for the long term.
Now, this one is coming from Leon, and he has ITC 450 shares at a price of 455 rupees per share. He's asking what should he do and when can he average. Looks like he's bought it at quite an elevated price for ITC, isn't it?
So I think you said what's up? 455. Yeah. So I think the current price is approximately at 450 for ITC. But the good part, at least so far today, is that the stock is forming a bullish hammer pattern. Now that by itself means that maybe we could be nearing an end of a corrective wave for ITC. And look at the other way around, that if the market gets into a bit of an incremental sell-off or maybe a mild bit of more correction, the money would probably come back into the defensive names as well as the low beta stocks. FMCG, of course, being one of the top favorite candidates over here. I think ITC could be a stock which could probably gain from there on. So I would believe that you could hold on to your investments in ITC. I'm assuming that it's not a short-term futures trade which you're looking out for. But if it's something with a time frame of 1 to 3 months, I believe at current levels you should look to hold on.
Okay, Shahina, the next query that I have is from Gopala Krishna from Trichy, and he's looking for a fresh investment in 4 stocks, where he wants your advice that any of the stock that you like the most at this point in time and any he should avoid. Stocks like Jindal SAW, JSW Infra, ITC as well as Nestle. What's your take on these counters in which he could go ahead and invest?
Well, ITC already Kunal has mentioned, and I think it's a portfolio stock you can buy and hold for the longer term. So is Nestle. You can use any of these declines that we are getting as of now to actually add on to these stocks for the long term. And Jindal SAW is an interesting bet. I think they will do better going forward. So that is another stock he can buy. So he can build a portfolio with all these stocks, buying in smaller quantities and then add on depending how they move over the next 3 to 6 months.
All right, on that note, we slip into a break on this edition of Buy Now, Sell Now. When we come back, we'll continue taking your queries. Don't go anywhere. Welcome back. You're watching Buy Now, Sell Now on ET Now. Let's continue taking all of his stock-related queries. This one is coming in from a viewer, Murli V, who's writing to us from Bangalore. And Murli wants to actually invest about 8 to 10 lakhs for the medium term, Shahina. He wants to know that which of the stock has more scope of appreciation. One is the ZFCVC, which he's already purchased at 15,800. He has 3M India, 31,300, and Linde India, 5,650. Out of these 3, which one do you think has a scope of further upside?
Well, I think Minda India does have good scope. In fact, the ZFCV India, I think he can exit because that looks pretty weak as of now. So I think these two, he can shift from one to the other.
Okay, moving on. And Kunal, the next query that I have is coming from a viewer. It's from Ramamurthy from Bahrain, and he wants to know that he's having 20% profit in Infosys. Good time to book out profits or continue to hold on?
So I think it depends on your time frame. I'm very bullish on the IT names, and I think the worst is behind these stocks. Yes, you might probably have few surprises post the results for these names. But I think eventually, if you've been sitting on excellent profits and you can probably ride maybe one more, maybe a last phase of volatility, then I would believe that the upside potential for these large cap IT names could be significantly higher in the next 1 to 2 years. So all what matters is that when you have bought those stocks, at what prices, what's the buffer you are, and what's the time frame going forward. I think if that's from a medium to long term perspective, then you should definitely look to hold on.
All right. The next query that I have is coming in from Krishna, who's writing to us from Chennai, and Krishna has L&T purchased at levels of 2,730 rupees per share. He wants to know whether the stock will see further upside next month or so, Kunal, or should he sell and book his profit? He has about 105 shares of L&T.
So I would probably expect the stock to try and moderate or just about get into a plateauing kind of a price trajectory going forward, because we've seen time and again that whenever the market gets into a sudden jolt of negativity or mild correction, L&T for the next I think 2 to 3 weeks broadly, I think starts to remain more sideways. So yesterday's high for the stock was around the 3,500, 520 mark. So far it's at 3,370 levels. So I believe that this 3,500, 3,400 broad levels could be a level of range for L&T. So don't expect too much of upside for the stock price if the market remains into a bit of a plateauing kind of a mode. And 3,450, 3,500 could be a good zone where you may.
From Kiran Krishnamurthy, and he's logging in all the way from Australia, and he wants to know take on SBI. Is SBI a good stock to buy and forget for the next 10 years, and can this be a multi-bagger for him in the long run? He's planning to put a big lump sum money into SBI stock. So what will be your advice?
Actually, I missed the full question, but I think if you're asking of SBI, yes, I think he can, but he should partly invest also in a private sector bank, preferably ICICI Bank or HDFC Bank along with SBI. So that I missed the full question.
So the question was this much only, that what's your take on SBI for a long term? He's looking to invest for the next 10 years. So your take is to not just invest in SBI, but include some of your private sector banks as well.
Yeah.
Okay.
Yes.
All right. This next one that I have is coming in from Sushil Kumar, and he has Graphite India purchased at 552 and Nalco at 113 rupees per share. Kunal, should he continue to hold on to these counters or book loss and in fact enter IT or banking stocks?
So you can do that in terms of entering these names, but I think even for Graphite as well as Nalco, I don't sense that you could probably see an immediate kind of a correction or a major part of the correction, because what these stocks have shown over the last 6 months to 1 year of price trends broadly is a significant change in the beta nature for these stocks. And time and again I've been mentioning this point, that whenever a stock migrates to a higher level, tries to get into so from a volatile stock, it becomes more of a trending stock, more stable. The beta lowers down significantly for these names, and I think that's what we've seen for HEG Graphite, as well as many of the commodity-related stocks as well as Nalco. So I would believe that the trends for these stocks could be could improve once the market gets into a bit of a stable territory. But again, the second part of the question is also quite valid, that investing into IT and banking names at current levels could probably be a good risk reward.
Okay, Kunal, coming back to you, Deepak Dave is a long-term investor and wants to take on JSW Infra. He's holding 400 shares of this counter from a price of 212 rupees. Can he go ahead and invest more?
See, Srishti, the time frame, I mean, the chart history is a bit limited for me to comment really on the long term. But so far the stock post the listing from 160 levels to now 240 plus, where the stock hit a high, now back to that 200, 210 mark. I think now seems to be getting into a zone where traders could look at a buy on dips. But again, as the chart is limited, would be difficult to forecast it from a long term play.
Okay, this one is coming in from a viewer who wants to know about JSW Infra and has asked Kunal to answer the question, but I will ask it to you, Shahina. JSW Infra bought about, the viewer has bought about 1,330 shares at a price of 196 rupees per share. He believes that it would be a great alternative to Adani Ports, and considering that JSW Group's high corporate governance, he expects it to be a multi-bagger in the next 5 years. He expects a target of around 500 in the next 5 years. What's your take, Shahina? Do you think his understanding or the fact that he wants to play the sector via JSW Infra makes sense?
If you look at JSW Group stocks as a whole for the last 5 to 10 years, they have been multi-baggers. So as a group, yes, it is possible. Having said that, I think even Adani Ports, the correction, we of course it's in a corrective phase, having gone up so much. I think even that stock over the 5 to 10 year period will give you good returns. At the same time, JSW Infra, I believe, has run up a lot, and in the shorter term, maybe 6 months, I believe the stock will go into a consolidation phase simply because I think it is expensive at current levels. But for the longer term, yes, these are the groups that give you multi-baggers.
All right, on that note, we slip into a break on this edition of Buy Now, Sell Now. But as promised, that exclusive conversation that we had with Ramesh Damani, and he believes that the leadership will be still intact with the PSU stock. More scope for further upside. But apart from that, he's also said that the leadership within the PSUs will lie with the defense companies. Listen in to this exclusive conversation.
Sectors that I called this time was, of course, the public sector stocks, Nikunj, and they've had a brilliant run out there. And I think we need to give credit to the Modi government. The public sector was one of the legs on the Indian economy. We always talked about privatizing this economy, but they've turned this around. If you look at Meet the People in DIPAM, they're really on top of the game. For the first time, they're doing an OFS, and the prices go sharply higher after the OFS. So the fall is very temporary in those prices. And I think the debate that at least we used to have that they should be privatized or value will not be unlocked has now receded. I think we are fine if these companies are so well managed. And I think one thing very important that people missed in the stock market was that A, the government would use these public sector units as the blunt edge for capital expansion, and B, that they were telling them that you have to pay 30% out as dividends. So you go back 2-3 years, you're getting these companies on today's earnings and be 7-8% yield, which is extraordinary bonanza for investors who got in early. So, I think it's been a good place, and I'm very clear, including after what the Prime Minister said in Parliament. I mean, I'm sure you noticed that. They basically, the Prime Minister of India going on the floor, well of Parliament, and saying a bullish case of public sector stocks. When did that happen? It's never happened. So we were ecstatic when the Prime Minister did that. I think it was in mid-August sometime. So I think my personal feeling is that the leadership, as I keep telling, is very much intact with the public sector stocks. They probably have a largish way to go still, because typically if you see in the bull market leadership, the stocks go up 10x, 20x after some point. So I would remain invested in good quality businesses.
I mean, the market cap for PSU stocks, we were looking at the data yesterday. From 2021, January 2021, the aggregate market cap for PSUs, including LIC and some new IPOs, is up 3x. That's the aggregate market cap.
I know, it's been a phenomenal run, and plus you got so much dividend out of it. I mean, you were getting these stocks basically at 4 or 5% yield, and with the certainty of an order book. It's not that the order books were speculative. We knew the order books for the next 5 years. So, it was, I think there was a whole debate which was, I think, wrongly conceived in the stock market last year, was that you buy quality at any price. And of course, that's a misleading. You can't buy quality at any price. You cannot, there's a price that you pay will reduce your investment returns without doubt. And I think the people who stuck to finding value investing and trying to find value irrespective of the PSU, small cap, large caps, it didn't matter. I think did well. So if you look at some of the exchanges, the major exchanges remained stable, but the unloved exchanges went up. The FMCG and the private banks didn't do well. The PSU banks did so well. So the market took note of the cheapness of those particular sectors and rewarded those.
Welcome back to Buy Now, Sell Now, a show where we get you answers for all your stock-related queries. And today onto the show, we have Shahina Mukaddam as well as Kunal Bothra with us to guide you better. We're moving on to the next query. And Shahina, this one is from Deepa, and she wants a view on Sona BLW. This has been an underperformer in the whole auto space. But do you believe that it could perform well in the times ahead? And can Deepa invest for the next 2 to 3 years?
I think after a long period of consolidation, the last couple of weeks the stock is looking up, and I think business also picking up. So yes, she can actually even add and continue investing and keep her positions.
All right, this one is coming in for you, Kunal, and this one is coming in from a viewer, Rajesh Pai, who's writing to us from Dubai. He has 768 shares of Laurus Labs at an average price of 430 rupees per share. He's been waiting for almost a year now. What's the outlook on this particular counter? Given the fact that you had Laurus Labs that keeps getting hit by earnings as well, so that also impacts the stock price, isn't it?
I missed the buy price.
Buy price is 430.
So I think you should look to, in fact, look to even average the stock. So I think today's dip, for example, in the last 1 or 2 weeks, I think closer to 380, 85 is where we've seen the selling, sudden selling getting arrested for Laura slab. So keep that as a point in case if the stock dips down to that level of 380 or 385. That's a zone where you could look to average. Try to bring down your cost price to maybe 405 odd levels. Tweaking a position size. I think there is a stronger chance as well as a likelihood that the stock may get into a breakout mode pretty soon, and you may probably get to exit the stock in a positive territory. So I would suggest an averaging out closer to 380, 85 levels.
Okay, Shahina, the next query is from Shashta Mani from Coimbatore, and he's been holding shares of Heritage Food, but his buy price is quite high, where he entered the stock at a price of 400 rupees. At a huge loss in this one, should he continue to hold on? If yes, then in what period do you believe that he might be able to recover this loss from this particular counter?
He should hold it, I think, at least for a couple of weeks. At least as of now, stock looks good, so he should continue holding and review it maybe in the next 3 to 4 months.
All right, this one is coming in from our viewer Vinod, who's writing to us on Gurgaon. He has 1,100 shares of Bandhan Bank at a price of 236 rupees per share. Zomato 500 shares at 103 rupees per share. For the long term, do you think both of these counters make sense to stay put? Should the viewer make some revision in his portfolio, Shahina?
He should continue holding both the stocks. Bandhan, I'm more positive on Zomato rather than Bandhan. Bandhan is on an up move as of now. He can look to review it after 3-4 months. But Zomato is a long-term investment. He can keep it in his long-term portfolio.
Okay, the next query, Kunal, is from Srinivasan. He has a query on HDFC Bank, but Mr. Srinivasan, we have already answered that before. But Kunal, he also has ICICI Bank, where he's holding 400 shares at a price of 780 rupees. Good to hold, or should he book profits? His view is for the next 3 years.
Well, of course, I think if it's 3 years, then you should look to hold on to the stock. It might still get into a bit of a wobbly, a bit of a volatile kind of a territory over the very near term. But the stock, I think, on a medium to long term chart, looks fairly attractive as well as positive. So I think you should continue to hold on.
All right, moving on. This one has come from Venkatapati from Chennai. Kunal, Foseco India is a counter that he has 300 shares at a price of 220 rupees per share. Wants a short-term view on this one.
So I think if I'm not wrong, the stock is at 3,930, so which means you are gaining substantially from your investments. Now, from a short-term view, I think yesterday's high, which was around 4,000 mark for Foseco, I think that could probably be a near-term target for the stock, because it has this odd tendency that whenever it sees an immediate sell-off, the stock goes sideways for at least a couple of weeks before it tends to get into a recovery as well as breaks past about the previous highs.
All right. So yes, it is the Foseco India. The stock price that you mentioned was in excess of about 3,000, and his buy price is 220 is what he's mentioned. Yeah, Shrishti?
Okay, moving on. Next, Shahina, this query is on Bank of Baroda. Narsimha Murthy wants to know that is this a good time to enter Bank of Baroda? If he should wait for some more correction, then any entry level for the same? And what's your outlook on the stock as well?
Well, the Bank of Baroda is one of the better PSU banks, and he can continue holding if he's holding it, and if he wants to buy it. Of course, if you're buying it at around 200, 205 levels, your upside will be better, and then he can look for a target of close to about 300 and 240, 245.
All right, with that, actually, let's kickstart with the rapid fire then. And the first one that is coming from Balaji from Chennai. Kunal, can he buy NHPC and GMR at current price for the short to medium term?
Well, yes, you can go ahead for both of these stocks.
Okay, beg your pardon, Kunal, this one is for you. This one is from John. He wants to take on Spencer Retail. He's holding 100 shares at a price of 72 rupees. What's the outlook on this particular counter?
I think good time to book out short-term profits if you're a short-term trader.
All right, Chelappan from Chennai has 200 shares of DLF. He is not actually mentioned the buy price, but he's definitely mentioned he is in profit. What should he do in that case, Shahina? Should he book out or stay put with DLF?
Continue to hold.
Okay, Kunal, Kamal wants to know, is this a good time to enter PFC and RSC for a short term, maybe for the next 3 to 6 months?
Not really. I think wait out for further leg of correction. In case if you are a very short-term trader, only then go for a buy today.
All right, this one is coming in from Vivek. He has 800 shares of Maruti at a price. Sorry, he has shares of Maruti at a price of 8,100 rupees per share for the short term in the next 6 months. What should he do? Kunal.
So I think you should look to hold on. Possibly 10,500 to 10,800 could be a target.
Okay, Shaina, what's your take on Vijaya Diagnostics? P. Suri Babu is holding 28 shares at a price of 531 rupees. What's the outlook?
I don't track it.
Okay, Shahina, Mahalakshmi wants to know, apart from L&T, which other counter is good in the infra space? Is it GR Infra, PNC Infra or NCC?
I think you can go for GMR Infra. It's looking good as of now.
Okay, Shahina, any take on Tata Tele? So Darshana is holding 1,000 shares at a price of 109. Should she move out of this one at a loss or continue to hold on?
She can continue to hold on, but there's a lot happening in that group as of now.
All right, this one is coming from Ramesh from Chennai. He wants to know about Welspun Enterprises. He's been holding at the levels of 240 rupees per share. Kunal, what should he do?
Well, I think you should continue to hold on. The stock is still looking fairly attractive.
Okay, but with this, viewers, it's time's up in this edition of the Rapid Fire as well as on the Buy Now Sell Now show. It's a goodbye from me and Cheryl and the entire team who put the show together. Thank you so much for watching, and we leave you at that. It's a goodbye from me and Cheryl and the entire team. But don't go anywhere. Markets and Noon will take the action ahead.